We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Welcome back, everyone. Hope you guys are having a great day. As always, I have Dan Weston, CROX. Dan CROX 10X Weston here with us.
This is the announcement for my 10X CROX course before 10X's, because that's what you do as a YouTuber, right?
How much is it going to cost? Just so we let our audience know.
$669.
Oh, okay. But yeah, of course, it's obviously going to show me how to find 10X companies.
Of course. At some point I'll find one, right? So, but it's cool. I can sell courses first.
Oh, we other CROX shareholders. So we'll be discussing CROX. Do you want to start with CROX, or do you want to torture Andrew when he gets here?
We can be nice.
We can be nice. You want to talk CROX before he gets here?
It's your stream. It's up to you.
All right, let's talk CROX earnings. So CROX reported earnings, and you know what? Let's pull up the investor presentation, because I think that's a good way to kind of utilize a, let's call it, way to organize our discussion around CROX. But there was a lot to like here, and we had a discussion in the club last night regarding CROX. And let me actually present real quick. Prior to the earnings release, one thing that was, and we'll talk a little bit about this too, because this is all this context is important. So there were other club members who were long CROX well before me, and there were some things I had to get comfortable with, and I wanted to see certain, let's say, certain progress being made towards the debt in particular. And at one point in the holding co, I was in CROX. Now I own CROX in the personal holding, so not the holding co anymore. But some of the things that I was wanting to see from them, and they had shown this in prior quarters, was debt reduction, the ability to reduce debt. The buyback was reinstated, so they continue to buy back shares. And undoubtedly, it was cheap. And one thing I should say, we should actually talk about this before we get into the presentation, a little bit of a brief rundown of what the CROX opportunity was. So share this tab instead, and we'll make it the white version like this. It's a little brighter. So the whole point of why CROX is trading at these depressed levels is having to do with the acquisition of Hey Dude that they did back in 2021, 2022 timeframe. So that massive drop you see there, that's from, in large part due to the acquisition. They were trading at a 20 multiple. Now they were trading at single digit multiples. Now they're at low double digit multiples. So the debt that they incurred on the Hey Dude acquisition, while prior to that, the balance sheet was beautiful, stunning, zero debt, all cash. And the margins that they produce on the traditional product is tech-like of sorts. Hey Dude is this, I don't know, how would you describe Hey Dude, Dan? What's like a word that describes Hey Dude?
Yachting shoes, I guess.
Yeah, yachting shoes. Yachting shoes. Okay, that's a good way of saying it. More casual, but and I get it. CROX is like these really ugly. Jesse is thinking about it. More of these like rubber ugly shoes that you wouldn't be caught dead in public. Sometimes some people feel that way. I'm actually probably one of those, but I understand and recognize that a lot of people don't feel that way. And one of the better parts of the business is, of course, the gibbets, but we'll get to that. But that's what it presented the opportunity to begin with. And Hey Dude, I think, was a failure of an acquisition. I don't think it was a good one by any stretch of the imagination. And that's the only reason why I was trading at a lower multiple to begin with. Otherwise, you do have, let's call it, a fairly stable business with extremely high margins, very defensible margins, and very, let's call it, adaptable as far as their supply chain goes. There's also some things to like about the current CEO and his prior experiences, also the CFO and the COO, where they come from. So they have experience, for example, at Amazon. The CEO actually was a consultant prior and actually specialized in supply chain management consulting and actually worked with Crocs, funnily enough. And so now he's working at Crocs. But I don't think he's a good M&A CEO for sure. He hasn't earned that at all. I think he has now a negative reputation in my eyes. But the view is they'll have this Hey Dude acquisition. It'll stabilize for the most part. I think they overpaid for it. And again, this is all probably why, in my view, the stock was punished for so long. Still punished, by the way. It's still punished and probably deserves to be punished. I don't think it deserves a 20 multiple like it did before. So it's not that the market's crazy for having punished this company. But earnings came out, and now now that you guys have the backstory, we can start discussing a little bit about this. So revenue, we'll talk about the revenue guide because the revenue guide wasn't too hot. But Crocs brand revenue of $3 billion was up 14%, and let me actually confirm just super quick that yes, this is the Q4. So the part that was really exciting, and this is what I said to club members prior to the earnings release, was if we see, because we already had the projections or the figures for revenue, and that's what caused a 20% pop in Crocs' share price earlier in the quarter, but we didn't know what segments they came from, and that's actually really important. So why, do you ask? Because Crocs, the main business or the legacy business, has much higher contribution margin than Hey Dude. Hey Dude contribution margin is far lower than legacy. So
And declining.
And declining.
Yes.
So you really don't have much excitement if you're telling me that there's no growth happening in the legacy business and growth is happening in Hey Dude. I view that what occurred today was a bit more optimistic view on the growth story of Crocs, and shows even more that they should have never done the Hey Dude acquisition. I might change my mind in the future if management shows something. I don't know if I'll be involved for that long, because it's just depending on where the price goes, because I don't really see it as like a core holding of mine. It's more of a fun and ancillary supporter holding, ancillary holding, more than anything else. But I don't know. I get aggravated every time I think about the Hey Dude acquisition. So it's the one thing I look and say, like, why? Why did you do it? Why did you need to do it? You just wanted to diversify your portfolio. But you can see that Hey Dude makes up 24% and Crocs is 76%. So Crocs is still the more material business, and parts of the Crocs business that are really exciting is the Jibbitz part of the business. They make insane margins on those.
Double-digit growth, margin expansion on Jibbitz, they said in the call transcript. So
okay, so I got a super chat to reveal the Crocs. This is because I said in voice calls.
I have the sandals. Oh,
well, that counts. That counts.
Although I'm wearing Hoka sandals right now, so.
For context, the reason why Lincoln is doing this, and I remember you saying this, Lincoln, I just didn't respond. But you asked me, or I said to you or everyone that you would never see me in my Crocs. You would never see my Crocs, period. And so now you're kind of cheating to see the Crocs, but I'm also kind of cheating because the camera is recognizing it as the color and it's converting it to the green screen, so it's transparent. So there you go. You can see Crocs. So there. Now you have seen the Crocs.
I mean, the Hey Dudes is not a lost cause, but like
No.
They've paid enough of the debt off that it's not the story anymore on Crocs, right? That it's back to the core business.
We can talk about Apple stock. We'll talk about them when we get to the super investors, because that is part of the discussion there. We're trying to get through Crocs first, and then when because Andrew's going to hop on here at some point, and
I should say I came into this differently than you, though, which is kind of funny. We're all at the same point at this, but I came into Crocs because I thought Hey Dudes was actually going to work out well back in June last year. So I bought it before that run up, and then I held it all the way through the crash after earnings last summer. So, and then talking through it with I think Hayden and you and some other people, I had to reassess, and I'm like, you know what, I'm not getting out of it because I still believe in the business itself. So watching them pay the debt down. And then I went down our cost base. I bought some more in to lower my cost basis. So I still believed in the investment, just, short term, a little bit of trouble with it. But that, when it went to 130 and dropped like a rock, that hurt. That was hard because that was hard to see.
I tried to save you, Andrew.
Oh,
But we're talking about Crocs. So you came into.
It's like F this.
To Crocs.
So we can talk about coin too. I've been seeing in the comments that a lot of people do not like Crocs, and that's perfectly fine. It's a fun investment. It could do really well. One thing I'll say I don't know if you guys want to say how serious Crocs is for you guys as an investment, but because I don't want to diminish it as if it's not like a serious, legitimate investment that could do really well. It could do really well.
I want to make money.
Was really well.
Serious about that.
Yes, exactly.
This would never make a long-term holding for me. This is like Disney. Same idea. I'll be out of it within a year or two.
It was really cheap.
I know.
Super cheap.
And Jesse, I think you got it. You've played it really well. Like, because I remember when you had it, you bought it at like in the 50s, and I think you sold it, and then you rebought it. So you've been putting money with this.
Yeah. So I think the first go around, I bought it in the 70s and the 50s, and then I sold it around 120 and up to 150, and then I rebought it 100 to 80 or so.
Yeah.
So I took it for a ride and then got back into it, and it's I don't know, it's been good to me so far. So
and then one of the things that I have pulled up here that also was really exciting, if you're thinking about from the business perspective, Jibbitz was up 17%.
They're 95% gross margin. Like, we know he likes Jibbitz, so he came back.
mm-hmm. Jibbitz are very intelligent.
They are.
It was a great move from management, honestly.
Dude, the Hey Dude though, oh my god, that was horrible. Their guide on Hey Dude is absolutely atrocious. Yeah.
It was kind of weird because in the call, I'm reading the transcript. They said on one hand, they were not ready or prepared to take on Hey Dudes logistically. And then on the other hand, they're like, we didn't expect it to not perform this poorly. It's like kind of two different thoughts there. Which one is it? But
I think they didn't have a good sense of their sell-in and their sell-through and the number of distributors they had. And they just kind of effed it up. Honestly, that's kind of what I took from that.
Yeah.
So hopefully, it sounds like they've consolidated. Hopefully they can iron it out a bit better. Because it does seem like the brand still seems to be doing pretty well. I just think they did not manage their inventory levels to their distributors well. They oversold to them, and then now they're trying to get through that backlog.
They are almost at their targeted leverage rates. So
hey, I told
you,
they
don't have to
I was
pay
like
the debt off completely for people listening.
Well, I remember I don't know if this was on a live stream or not, but Fabio, me and you were talking about this, and you were talking about how you would want them to get back down to about, I think it's like $1 billion in debt, and I was like, I don't know if they'll do $1 billion, but I think they can get to 1.5 billion pretty quick, and they're at 1.6 now, 1.66 or something like that. So yeah, their debt is really coming in line, coming in check, and which means if they get that to a point where they feel really, really comfortable, they can start shoving a lot of money towards buybacks if they want to. Not sure if they will, but they've done it before.
I want them to get into bog bags. That's what I want to see.
I just noticed
Dude,
Henry's
seriously.
I want them to either get competitive with that or buy bog bags. I hate to say it, but maybe not buy them. Okay, maybe they fight it out. But anything Jibbitz related, I would love to see. So any product that would promote Jibbitz, like these beach bags, right? But
I wonder if Bog
Ugh.
Bag has the patent or something like that on the bag.
yeah, I
and they
was thinking
can't,
that because it looks exactly like a croc bag,
right?
Like if Crocs
yeah.
did it. Yeah. Maybe they do license it actually. Yeah.
I'm seeing you guys are bringing up into the chat, by the way. You guys are bringing up really good topics because, again, most of the time you guys guide us in some way or another. And I see questions about Adyen versus PayPal. The questions on Apple we will get to because there is a super investor. That is topic number 2. Once we conclude here with Crocs, and there is a super investor who has begun selling Apple, so that is inevitably going to be discussed. Okay,
But I'm not going
so
to pretend that I knew Hey Dudes was going to suck. I'll just make that clear. I thought Hey Dudes was going to do great because the internet traffic on it. I went to like a Dick's store to see the display. It was very it had a very impressive display.
Yeah.
Which now they're kind of in the back of the store. So
I hate
it's
it.
I
kind
think
of
they'll-
relegated, but
I think they'll still do all right.
yeah, I do.
But the uncertainty and the sell off the first time that it happened was around Hey Dude, right? When we
Mhm.
got that first flush down into like 100 and then 80, 70, 50, that was pretty much all from the Hey Dude uncertainty, that
Yeah.
acquisition, the market digesting that. So
That
it
was
gave a
not-
good opportunity. Yeah, just from those unknowns. But yeah, it's not looking too hot right now.
And that was hard to hold. It was hard to hold. It's like I still believe, but
Now not so
Andrew
hard,
might
right?
be.
Yeah. Now it's not so
It's hard. It's hard buying profitable companies.
Yeah.
Profitable companies at extremely low valuations, that the setup is just right. Yeah, what did it for me was prior to this earnings report and in the prior quarter, after looking through everything, they were showing that they were kind of fulfilling my main concerns. And for some reason, I had gaslit myself into thinking they were increasing the price. I remember having discussions with all of you late at night, and then I kept repeating that fact as if it was fact. And I don't know why I had it in my mind that they were increasing price. I was concerned that this was last year, by the way. I was concerned that they were going to have a potential demand destruction because the price wouldn't be aligned with what customers really wanted. Because I had in my mind they were going to sell them at $100 a pair. I was like, what?
Nah.
Yeah. I had gaslit myself for sure. But I think overall with Crocs's current earnings, what I took away from it is they've sort of proven, let's call it the next page. The next part of their story is beginning, and that's moving past the Hey Dude blunder. And now, if Hey Dude is successful, I think that's icing on the cake. I think that is now something that could potentially really juice the returns up. Because right now, I think the market is just assuming Hey Dude's a dud. But the legacy business is so good that it's still saved the overall business. They're back down to adequate leverage levels that they came out and targeted. They're buying back shares. They're still trading at a fairly stable multiple. Now, revenue growth, someone was saying it earlier, and I think the panel, I guess I could get your guys' opinion on this, that revenue growth isn't projected to be all too strong. But I would argue and push back, well, that's that's fine based off what it's priced for. It was really cheap.
Yeah,
I think people forget sometimes like the valuation to growth metrics that you can look at. Yeah. Where it is now, it's like this is not a 30p company.
Yeah, I mean, when I was doing my analysis on it, like I was pricing it for like somewhat of a like deterioration, and the market was definitely pricing it for that. Like if they grow at 3 to 5% for the next 5 years, oh god, like it's gonna be ridiculous just because the amount of firepower they'll have with buybacks, and with how much cash flow they have.
Their margin improvement for the macro we're in right now. I was like, holy crap.
Yeah.
For Crocs, not Hey Dude.
But that was from the price increases because they did increase the price. And then they also brought they brought parity on their prices across the different platforms. So I'll just say it, I purchased my Crocs on like that final sale on Amazon. And I don't think you can get them at the price I bought them for anymore. At all. So
well, like you said, Hey Dude's not dead. I mean, they can do like like they're talking about like thematic shoes for like different types of events, movie releases, ugly Christmas sweater shoes. And if they pay the debt down, it's just icing on the cake.
I will say that if the market, I think Fabio is right, and the market's kind of accepted that no, Hey Dude is a bust at this point.
Yeah.
Like it's not going to be anything huge as far as the entire Crocs brand. But if we see some type of spark and Hey Dude pick back up, like that could be a very interesting catalyst, especially if the market's pricing this off of just the Crocs core brand. And then, they turn out to be correct and they just had way too much sell in, and we see a reversion and Hey Dude pick back up. That could be a nice pricing catalyst for them.
Yes. No, absolutely. I think at that point, your returns are going to look
Stupid.
pretty nice. Yeah.
Yeah.
It could become sort of like a Musa, or, well, we won't discuss that here, but the other one play, which I'm
I
also
said 200 or bust. There you go.
200 plus.
200 or bust.
Does Crocs do a
man.
dividend?
A dividend? No.
No dividend.
Just
It's
buybacks.
strategic. It's strategic buybacks and mostly debt pay down. I mean, they're still paying the price for that acquisition.
Wouldn't put it past them though. After they achieve some semblance of stability, that they start initiate a dividend.
Yeah. The thing that would like totally turn me off to Crocs is if they did another acquisition. I'd be like, no, guys, learn your
it's
lesson.
terrible.
Get out. Like, come on, guys. Unless it was like very, very, very minuscule. But yeah, if they try to do another acquisition, I'd be pretty bummed with that.
Wait, is Jake? Let me get this
Yeah.
straight. Okay. I was trying to get it. Look, okay. I don't want to bring it up on your live streams. It's fine.
Spitting?
No, go for
How
it.
do you do that?
Well, I get annoyed when people in capital mindset, new people, let's just say, will come in and say, all you guys do is do trolling. I don't see you talk about anything else, something like that. And it's happened like 5 times. And it pisses me off because I'm like, basically, the value is there. You're just being a lazy sack of, you know what, because it's there and you have to go find it. No one's going to tell you to buy this or sell that. But there's write-ups.
Go.
People cover stuff. I talk about investments. The content is in the community. If you don't find it, that's on you. Don't just be like, well, all you guys do is troll. Like, well, that's part of the fun. But the value is there. Like, and it's on you to find it.
Well, there's literal articles.
Yeah.
Sections.
Yeah.
Like there's articles, there's icon pitches. My icon pitch made you money if you followed it. So I don't want to hear it. I really don't. But go follow Jeremy if you want to lose money on
what was your icon pitch?
Curtis Wright.
I'm buying some tomorrow. Okay.
Yeah, Curtis Wright did really well.
It was 190 when I pitched
Really
it. Now
well.
it's like 235, I think. But
Yeah.
I have some.
Just go read the investment write-ups, like the investment ideas write-ups. I mean, you could spend probably like 3 weeks in there.
Well, there's also like
if you comment in the general chat, yes, there's trolling. The investment chats we try to keep on track, but I can't time everyone out that clowns around in there, which I probably should. But
sometimes we get bored with the market, right? So you have to have some fun.
Dude, we have jobs. We're all like professionals. You get stressed out. We like to shit talk.
I never get stressed. I don't know.
Money. Like, come on. You can't. There's not like trades every day. Like Disney was like 5 months ago for me. Crocs was last summer. Like it doesn't. There's not stuff to trade every day. Like
or especially if it's been like a year and then they start asking you about it.
With you. What?
Yeah, I guess Dan's point is like if you don't like that, then you can just go find someone that values some price to sales and go follow their buys and sells.
Go use Everything Money software. You can use it all day. Good luck. Go find that value. Go find it.
Yeah, and furthermore, like that there's the sections that you're supposed to be relaxed, right? And that's like the general chats. The general chats here are supposed to be kind of laid back, relaxed, and you can talk about anything. That's why it's general. And then, yeah, the investing chat is meant to be more focused. And then you have to open up threads in order to get the conversation going on that topic, so no one else can flood it. But yeah, and I'm looking at, you know what? I'm looking at Big Pharma Show. I'm looking at you.
If I time him out, he just goes to mom or dad. Gets back in 20 minutes when I time him out for an hour. So I don't know. He makes it like such a travesty. I time him out for 1 hour. And it's like I killed him inside.
Dan's like the mean uncle.
Uh-huh.
Timing people out. They're like, Mom, Dan.
I'm like the house dad. I'm the house dad of the frat. So I don't care.
Yeah. Oh, and technically, yeah, you can just block people and then you can never see their comments. Of course, but the thing with Big Pharma is he will troll like 90% of the time. And then like 10% of the time, it's just like
he'll like drop knowledge bombs. It's like, what?
I shared one of the interactions between him and Leo today. I literally was in my car, almost spit my food out. I was laughing so hard. What was it? Let's see, I have it in here somewhere, but it's when all it was Biotech's misspelled retail. He said better than most retail. And Leo said, want to try that sentence again? Sure. How are you? Dan's not laughing.
I got you good this week with the Lutheran comment.
Oh, that was good.
You opened that up. I was like, oh, this is too easy.
What was it? Oh yeah, when I wanted to.
If you're gonna quit Catholicism, you got to nail it on their door.
I'm just gonna go and be like, I'm done.
Yeah, with a wooden mallet.
All right, so we have 13 Fs to go over. And I think the first one we're going to go over is Scion Asset Management, or Dr. Michael Burry. I'm using Whale Wisdom because it's a nice little, user interface. So
that looks nice.
Yeah, it's a nice interface. Has a little arrows, has red versus
better
green.
Than Datarama.
Right? It's cool, red, green, arrow up and down, so it tells you visually. But anyways, so going through the portfolio, I already immediately disagree with Baba. He's like back in Baba, this maniac. He's like going in and out of Baba. He's torturing the Baba investors.
He's in China.
Absolutely torturing. Woo! Yeah. Oh yeah, you're trading China on sentiment.
I'm in leveraged. I'm in yin. I'm not gonna buy one individual. Yeah, screw it.
I mean, that degenerate trade could very much work out. It's a
degenerate trade. I picked the degenerate instrument of choice, so all right.
And the next one, JD, kind of follows the same thing. I can only imagine that he's doing this to play on, again, like a sentimental shift in China, because Burry's not really a long-term investor ever. He doesn't really hold things for too long. So I'm looking at each one and I'm trying to picture what is the catalyst he is potentially seeing. I don't get Oracle. I think they're one of the weaker hyperscalers. I don't know if there's something on the horizon that might boost the price. I don't get Citigroup. Frankly, I think he's missed out on Citigroup. NXST. Google, he seems to have increased his allocation to Google. Added Google, not increased allocation, added Google. Amazon, I agree with. Hell yeah. Booking, sure. Trying to see Warner Bros. Discovery. This one's one that kind of stirred the pot a little bit because it's pretty popular on YouTube, moderately popular in the club, kind of like that deep value streamer out there right now, plagued by debt, but he's added to that.
He bailed on Nextstar. What the hell?
Can't win them all.
It's all right. You know what? I'd rather be on the other side of his trades.
He put Toast in there. Oh, look at that. See, look at everything that's new. That's my point.
Warner Brothers. What the hell's with Warner Brothers?
No, this man's straight. This one is the one that is the most interesting. I feel like he can come clean, and most people watching know, because I think the majority of people watch the public live streams and the private content. They're all club members. or a decent amount of you. So this is my new stock that I blocked out. And by the way, you guys could have told because as people told me in the Discord that during the live stream, my pie chart had the ticker, so someone could have deduced what it was. Egg on my face, yeah. And I didn't take it down. I just kept it because I was like, all right, well, someone would have to like eyeball it and see it. If you caught it, you caught it. But ACIC, that was my newer position. It's not new anymore, but it was new when I did the last portfolio update. And he added ACIC. Our cost basis, our range of cost basis, probably around the same, if I'm being honest. But yeah, it's kind of interesting to see that he got into this one. And everything else, I don't really. He's back. Wait, he added to QRTEA, curate. Man, that he loves these like deep value. I don't get HCA. I don't get that one. And let me pull up their stock price. By the way, does anyone have a request on who's next for super investors?
Well, before we do that, just another point to Dan's point. This was a really great pitch in the investment ideas portion of Capital Mindset from a community member. So,
oh yes, we will get into that. Actually, we'll take a pause on this because we're getting asked about PayPal. We were asked about PayPal earlier.
Oh, I didn't.
David Tepper, you want to look at Tepper real quick?
You want Tepper?
Yeah, I just want to make a comment because I was going to say to Fabio, I noticed when I searched before this quickly, a lot of selling of NVIDIA, Intel, and AMD. A lot of super investors are selling out of those.
All right, put a pin on the discussion on PayPal, and I think I know which stock you want us to talk about, Andrew.
What stock is that?
You said it was a pitch, right? And
I was talking about ACIC.
Oh,
that you just had.
Yeah.
Yes, if we're talking about ACIC, yes, that was a pitch.
No, that's what I was trying to. I didn't want to cut you off. I was saying it was a great pitch from the community. So to Dan's point.
Mm-hmm.
Yes, that was.
Oh no, we just troll all the time, Andrew.
I don't know. I must have missed. I don't know what you're referencing. I've been like kind of busy and not like in that active the last couple of days.
I come in at lunch and I see something and I choose violence occasionally.
Just troll with our.
I didn't even see it either. I didn't even know this. All right, but we have. I pulled it up right here. So this is Appaloosa LP. And what is Dan pointing out? Look at that. Look what he's selling.
Yep. That was an interesting one.
Who is this?
Tepper.
Eh.
Selling Meta, but increasing Microsoft. He's not the only one here.
No.
Andrew's favorite investor increased Microsoft by quite a bit, actually. And I think Andrew's favorite investor has been selling NVIDIA. He's been trimming it.
Yeah, makes sense. I mean, when you make that much money on it, for how long he's been in it, you want to trim your exposure a little bit.
Yeah, and looks like here we have a reduction.
This is why I don't care. Like, I think Tepper, I'm not saying anything against him as a hedge fund manager. He's more in and out of stuff. So guys got calls on Art K. like and like that's a pretty significant portion of your 2.3 in calls isn't nothing.
Yeah, I see it there.
Whoa. Wow.
I guess that's actually maybe he's making a bet on just like extremely high beta.
Yeah,
binary.
No, it makes sense. He's betting, like you said, high beta, maybe some continuing run, and he's been right. I think I could be wrong.
Yeah.
Isn't it funny how like ARK has become like a trading? Have you noticed that for like a lot of these institutional investors, it's basically a trading on high beta.
Interesting. Yeah, I mean that makes sense.
Did you guys see my newest post on Twitter?
No.
Here.
I got to run, guys.
See you, Jesse.
Yeah, I saw this before. Yeah. It's hilarious.
See ARK Innovation. And this is measuring, of course, the quantity of wealth it was destroyed. So how many people invested is also important, and when they invested.
Yeah.
Oof. There's a lot of YouTubers that would not are so glad their numbers.
China,
in here.
QQQ shorting, and ARK. There you go. Just
Yep.
destroying people.
Looks like he's also adding Oracle. But I guess the next one we'll talk about is, okay, I'll give you guys the choice. Seth Klarman, Pabrai, or Andrew's favorite investor.
Let's do Klarman.
Klarman?
Yeah.
I have no idea what Monish Pabrai has right now.
So here with Klarman, we have, let's see, decrease in Google, decrease in FIS, and he's keeping the top holdings stable. He's basically what I think when I think of Klarman, I think large cap value, mid cap value with a sprinkle of small cap value in there somewhere. And I know that his recent performance has been subpar. He looks like he added, like you said, Dan Jacobs. He has his continued position in CRH. So
Yeah,
we
I
share
think
that.
I'm like, I wonder if he's looking what I'm thinking with Jacobs. So interesting.
But he was a net seller, huh? Or no, maybe I just trying to look at. Looks like there's been more sells.
Well, when I think of Klarman, I think of a little bit more conservative portfolio, more tilt on value. I don't really see him taking, like, he's been pretty absent from large cap tech, or large cap growth. Let's just say large cap growth as a whole. You see Google in there, but he is taking some profits on Google. It's a very large position, but everything else is absent in this report.
Mm-hmm.
So not really the more exciting ones, but yeah.
I swear I don't understand the Warner Brothers Discovery thing. I don't understand it.
A lot of these value guys have Warner Bros. Discovery.
Yeah, like, I don't know. I don't see how they get out of this. Maybe they know something we don't about the debt. Maybe they can restructure it, which would change the valuation. But
well,
I don't get it.
I even think the structures, currently the structure is fine because the maturities are so far out, but it is an overhang on the stock, and they haven't been able to boost the user growth in Max. So if you look at the list, it goes like YouTube, Netflix, Amazon, then Hulu, then Disney Plus, and then HBO Max. So and Disney is technically Hulu plus Disney, and that puts it above Amazon if you do that calculation. But Max is really far behind. And then even if you were to add hypothetically Paramount Plus to Max, it still doesn't even get close to Amazon, which is kind of bad. But hey, that's just me. Okay, so next one. I think we'll go with Andrew's favorite.
Mm-hmm.
Or should we save him for last?
We can save him for last. Did you look at Bill Ackman yet?
No, let's take a look at Bill Ackman.
Good old Billy boy.
And for the one who requested Apple, we're getting to him. Fear not. We're getting to the super investor.
Oh, did someone buy a lot of Apple?
No, someone sold Apple.
Oh.
So, all right, looks like we're selling out of Hilton. We're selling out of CMG. By the way, the reason why I'm saying we are is because I copy trade Bill Ackman. I'm just kidding.
You know what I found the most interesting about his portfolio? I wonder why he's got his Google split up the way he does.
Oh, that he has a portion in their voting and non-voting?
Yeah, like I could see it being like equal weighted, but like he's got 11% one, 12% one, like 6% the other.
Yeah. I think depending on when he started acquiring it, there was a discount. There used to be a discount in GOOG.
No, he's a recent buyer. Yeah, Q1 23.
So then I can't tell you exactly why he has the split. I just choose to buy GOGL.
Yeah.
I want that votes, but
I mean, it makes sense. It's crazy though. That CMG is still so big. Like he trimmed a little bit, but the net amount of his portfolio went up. Like his percentage in it went up. So it's
Yeah.
like, yeah, he trimmed, but it still grew as a percentage. So it doesn't really. It's not like he actually trimmed. Like he was just controlling how much it became actually.
Yeah, he's managing his risk.
Yeah.
That's all I see here. He's managing his risk across the portfolio. Because same thing happened with Hilton. You see previous percentage of the portfolio, 14.
Mhm.
He sold 10% of it, almost 11, but it's 16%. He's managing the risk.
The only one he's actually getting out of his lows.
Yes, that's interesting.
Someone told me that today. I was like, okay. I bailed on Lowe's too, so good.
Good. Let it die.
Dead business.
So that's interesting to see. All right, we have Pabrai, Mr. Buffet, or your favorite.
Let's go to the Buffett.
Buffett. All right, let's go.
If you notice, I really don't care to look at Pabrai, so that's why I just.
Yeah, you keep going around Pabrai. Pabrai is the greatest investor of all time. I don't know what you're talking
Shouldn't Pabrai be 100% wagon wheel ETF, right? His new.
Oh, that's right. What's in that? Well, it's probably the same thing that's in his fund, I'm guessing.
So now this will spur the discussion around Apple because it was asked, but it's not that big of a deal, right?
I mean,
It's a
So,
small amount of.
if
Barely
well,
so.
going back to the Ackman point, it grew as a percentage of the portfolio.
Yes. Yes. But barely though. But yes.
Yeah, but the point is like people like he sold, but it still grew. He bought Chevron.
I'm trying to see where his Occidental Petroleum position is at.
Wow, he's bailing on Paramount, kind of.
Oh man,
That was a stupid buy.
I know that. Like again, it's like I don't understand.
Wait,
Paramount
okay.
Water.
I kind of found it sort of funny that they owned MKL. Do you know why?
Because MKL,
Its largest position is Berkshire Hathaway.
yeah. You scratch my back, I scratch yours.
Yeah,
It's like,
don't
no more
worry.
back scratching.
I got you.
That's the wagon wheel or the wagon circle.
I didn't realize he. Oh, okay. It's hard. It's nothing, but that's really weird. He's got like a tiny bit of VO and Spy. Weird.
Yeah, Vu, Spy. I'm trying to see where's Oxy's at. Yeah, there it is. Dang, that is so funny. He is dealing with such large numbers that he owns 26% of this co. And it's all the way down here. I think, are we on the third
Well,
page? No, we're
I
on the
don't
second
think
page.
this. It was almost like not listing it there. If you look like it had it separately listed. That's why it's just being the reporting here is funky. Oh, because
Okay.
it's a different form.
Where? No, it should be. Then we should see it. Would it not be listed? Is it because he owns?
I would
too
have
much
thought
of
it would be listed.
I think maybe because he owns too much of it, he has to file it just in the Form 4. Yeah, because I don't see it here.
Weird.
They have Nubank, T-Mobile, HPQ. I think it's good he's getting out of this. That was like another large cap value, which I don't know if I think that might have worked out a little bit. No, it didn't. It didn't really work out.
It did not work out.
Yeah, it didn't work out. All right, but okay, so he's selling Apple. So let's begin the discussion about Apple. So we had actually a really great discussion today in the club about Apple, funnily enough. So I mean, I'm kind of like warmed up, ready to go to talk about it. So what is there to not say about Apple? We won't get into like the business. I think everyone knows. I'm not going to insult your intelligence by telling you what Apple does. Bless you. Oh, I misread your body language.
No, you're good. I was sneezing earlier. I think like because I've been working in the house, I think my nose is all like messed up.
That was such a fake. I'm not even kidding. You were like, and then it was a yawn. What? Like, I've never seen a wound up for a yawn before.
I got some powerful yawns. What can I say?
Oh yeah.
So Apple,
Yes.
what's the discussion to have around it?
So the rationale, I guess, that's getting some people excited is the new Vision Pro. And some people are thinking it's a game changer, of course, and the share price is down from the all-time highs. But my argument is I don't really think the Vision Pro is as much of a game changer as people might believe. I think that as a prototype, it's interesting, it's good, it's going to bring competition to the virtual reality AR space. But I don't really see it having broad-based adoption, at least at this iteration. Maybe we'll have to wait further down the line. And I actually do think, I don't say this because I'm a Meta shareholder. I could care less about Reality Labs, but the current offering from Meta, I think, is superior, especially considering the price point. So I think that the usability of the Vision Pro is not there in terms of practicality. You have to carry a battery around that has 2 hours of life. The weight is not very comfortable, but we'll see what version 2 is like. And maybe version 2 is a lot better. And then that's the one that maybe changes the game. But we'll have to see. I think it's too early.
You young people.
I don't think you can have a game-changing. So we were in the voice chat, and we were talking about the price of it, and someone was talking. He's like, "You guys are Americans. Can't you just like pay for it? Does it not matter?" I was like, "Dude, $3,500 is a lot of money." Like,
Wait,
yeah. So I was like, "Aren't you guys Americans? Can't you just like buy it?" I was like, "No, that's a lot of money."
yeah, $3,500. I mean, that's as expensive, I think, as their top end. Not the big one, but I think it's like their top end 15-inch or 13-inch MacBook Pro.
Yeah.
So,
and so I mean, I haven't tried it, so I really can't comment on what I think about it. I do think like those videos, and I'm sorry, this is like tinfoil hat conspiracy theory. I think those videos of people walking around the streets, like it's like doing this stuff. I think that's marketing by Apple.
I'm waiting for a homeless crazy person to want to walk up to one of those people and just freaking spike their goggles off their head. At some point.
It looks pretty silly,
But
yeah.
But what do you say? I've told you this historically from like last 20 years, like it's been proven product after product fails because people don't want to wear technology on their face. And there's been other products that have tried, I've done this 3D televisions. We've had virtual gaming systems. It's always the same. People just don't want to wear technology on their face other than like earbuds.
I think that people are going to be more willing to do it, but not like walking around. It's not going to replace the phone.
Do you think it really would replace like a monitor? Or is it just a convenience or novelty, right? So for it to work like you're saying, it's got to replace like your computer monitor. So like
Yes.
you wouldn't have a computer monitor. You'd use this thing every day. Otherwise, it's just a novelty, right?
Yes, and it has to have multiple functions. Like I think it has to have the capability to also entertain you, video games, content, streaming, etc. The content streaming is easy. The video games is easier said than done. For example, have you seen you can play this on the Meta Quest. Have you seen games like Blade and Sorcery?
Mm-hmm.
Absolutely ridiculous. Like that looks really fun.
Yeah, but I sent you an article though. Assassin's Creed VR was a complete failure. The company even said it. They're pausing all their virtual game development for now.
So,
I guarantee you, if I see gameplay, it probably sucks.
Yeah. Well, the thing is, you have to make a VR game that's good that doesn't disorient people. Like,
Yeah.
I remember when Half-Life Alexa, was it Alexa or was it Alex came out?
Yeah, I know what
which
you're
is the
talking
VR
about.
one.
Yeah.
Like a lot of people were like, "Oh, it was fun, but I just got dizzy and disoriented, and I couldn't like play it." Like, because that's the other thing about VR is like people can get dizzy and messed up from it.
Like I went to see a 3D movie when you had to wear the glasses. I was sick after I had just like it's like fatigue, right? Because you're looking through these glasses the whole time. It's just like this is not fun. So
Whenever those happen, I'd always get like right here would always bother me, but I don't wear glasses, so I don't know if that's a.
yeah. And the first 3D television, I don't know if people remember, the first 3D TVs had powered goggles, and then they converted some of them to later where it was like a plastic frame,
Mhm.
and they still all failed. It didn't matter. It didn't matter when they switched to a lighter version. People still didn't want to wear it. So,
Yeah.
Yeah. If
but
they
that's what
get,
you're up against, anyways.
I think that the getting it to this form factor is the eventual goal. And I think that the Meta glasses with Ray-Bans, how they've sold out, it's not what it doesn't have any of the capabilities that the Meta Quest or Vision Pro does, but as like a starter, as like a concept moving towards something like that more and more advanced in the future in that direction, I think that's where we need to go. But its functionality is actually quite impressive. I mean, it can function as both a way to listen, blah blah blah, take calls, listen to music, film videos, etc. And it's just added functionality. It's not even that much more expensive than normal Ray-Bans,
Although
honestly.
we
And of
can't
course-
not mention the failure of Google.
I was
in this
about to
case.
bring this
The
up. I was going to say,
complete-
of course.
So you talk about smaller function like what you're wearing. Okay, Google tried that, bombed completely.
Okay, first of all, what they did was idiotic. First of all, they wanted to like look cool. Like they wanted to be like futuristic, like, oh, I have this thing here and I can press it. Like they wanted it to like look cool. It just looks stupid. At least with like Meta, I think it just looks like glasses. Like
I agree. Yeah. But did you? So what was happening with the Google glasses? Because people knew what they look like. So people were going to bars with those, and then people would come up to you and be like, "Are you recording me at this bar?" And they would get in fist fights over it because it's like, like I don't want to be recorded in public, and if I know you're wearing the Google glasses that can record stuff, that's a problem to me. But
I'm trying
I
to
guess
see
I
if I
think
can.
some the Meta ones, some of the ones after that, they have like a little red light, I think, when they're recording. So like you can tell they're recording you or not.
Yes. Yeah.
I
But
think so,
someone
right?
could cover it realistically.
Mhm.
I'm pulling this up. First I gotta download this, and then I can send it here, and then I can pull it up on the screen. Yeah, because I'm looking for an image for the Google glasses. I'm trying to see what they would look like.
Is that Jake as a kid?
Well, now I'm not going to pull it up.
Oh
Now
my
I'm
God.
not going to pull it up. Jake's watching sweat. He's like, "He's going to pull me up."
That's pretty good. That's pretty good.
No, it wasn't me, Bacon. It was a picture.
Don't worry, Jake. I won't put it up on stream. All right. But anyways. All right. So that was the rough image of the Google Glass. But anyways, the discussion around Apple, I don't think necessarily they're that cheap. In fact, forward projections on earnings is relatively flat. You're getting buybacks, sure, and that's increasing earnings per share. Doc, to everyone later. Thanks. All right, but anyways, so we have that going for it, but what is the current multiple? The current multiple is closer to 30, and so I think buybacks are not going to be very effective or helpful to increase incremental earnings per share. So what you end up with here is a slow grower, very profitable business, but I don't like their current buyback policy. To summarize the conversation, I don't like the current buyback policy, and I don't know, or I'm not too confident in the forward return. Now, where Apple always surprises is how they're able to monetize the user base. So every time people seem to think that they're done, they're able to come up with some new way to monetize that user base. And that was a large part of the discussion today, is that Apple's a story of underestimation. Yeah, and I know it's funny. It's like, it's Apple, but people's imaginations are seemingly blocked when it comes to the ability to imagine how big these companies can get. I remember back in 2017 when investors were debating whether or not the makeup of the S&P was overcome by Apple, Amazon, Alphabet, Meta, etc. And fast forward till today, what situation are we in? We're pretty much in the same boat, but more. And so people in 2017, and this was talked about, CNBC, Bloomberg, and you would see various interview platforms that maybe you had to pay for, but various interview platforms that had fund managers on, and they would discuss the concerns. Seemingly, a lot of people have fallen for that. I think there's a name for it. It's like anchoring of expectations.
Mm-hmm.
So, you're used to the people of 2017 were maybe used to the largest companies being 500 billion. And so like hitting $1 trillion is like, wow, that's insane. That's incredible. Surely that's the peak. That's they're not going to grow any further than that. And companies like both Apple, which continue to grow immensely in 2021 with the introduction of the new chips in their laptops, and both, of course, their phones, they saw a new super cycle, and then we saw Apple put out numbers that we previously thought they couldn't do. Then you see other companies like Microsoft that reinvented themselves in such a massive way and continue to put up really strong numbers, and today is the most valuable company on the planet, publicly traded company on the planet. Well, Saudi Aramco might be bigger, or they might have surpassed Saudi Aramco. But anyways, Mr. 12, 14, 16 says worth $60 per share. That would be a very interesting price. Oh, you're saying Paul said it's worth $60. Paul has no credibility at this point, but yeah.
How can he still? How do you lose $10 million and keep posting videos?
Minimum 10 million.
Minimum. You have to keep saying that. That's the minimum he lost based on what he said.
Was his capitulation not like, part of me feels like he capitulates, now's the time to buy puts on Nvidia, but
that would be funny, and that would be the biggest egg on his face. That's like the biggest revenge trade.
Nvidia. I mean, a lot of them bailed on it. So,
what levers do they have to pull to find another cycle? Seems like they need to need a completely new business unit. I think that just the expansion in services could drive incremental net income growth, because they don't really have to sell new units. They just need maintenance in the units. If they figure out new services or new ways to add, and I think that's what they're going to now focus on with their new, they haven't revealed it yet, so I'm completely speculating on it. But they said they're going to release something pretty powerful for the App Store. And I think depending on what side of the relationship that affects, whether it's the developer side or the consumer side or both, I think they're leaning on some new tools to help monetize the App Store even more. And it seems like they're also lowering their take rate on the App Store going forward, which they wouldn't do that unless they have another way that they're going to be monetizing the App Store. And I think that's the direction they're moving. And so I wouldn't underestimate Apple's ability to find new ways to figure out how to make money. For example, I don't know if most people know this. Did you know that when you use Apple Pay, your bank is paying Apple? It's small, but they're paying Apple. Apple's making money from that transaction. Really? Yeah, that's insane. So every time that I use Apple Pay a lot because it's so convenient. But I had no idea that every time I'm doing that, I'm screwing over the banks that I use. Not screwing them over, but the banks are paying. You can't use Capital One credit cards on Apple Pay. I found this out from someone because I don't have any relationships with Capital One, but someone told me, confirm this because I could be wrong. Maybe I'm completely wrong and that person told me the wrong thing, but you can't use Capital One credit cards on Apple Pay. That would mean that Capital One doesn't want to pay that fee to Apple. And it's just a refusal of business there. But Chase will pay it, Bank of America, all the banks pay it. I see wrong. Okay, so then that person was wrong. I use Capital One all the time. Okay, so never mind. Capital One is beneath Fabio. No. But I promise that someone told me that, so that's why I asked the chat.
Dude, they always have the worst deals when I get Capital One offers. Like the worst interest rates, the crappiest deals. I don't know.
Oh, thank you. Okay, that makes sense. Okay, international. Okay,
Oh.
they are. The person who did tell me was not in the U.S.
I am gonna get Apple TV though, so I'll be a customer kind of.
Why would you get Apple TV if? Oh, you mean the
Masters
subscription?
of Air is on it, so I want to watch it.
Oh, I thought you meant like the physical device.
That's what I thought
Oh.
too. And I was like, just buy.
Wait, what's the television service called then? I don't know.
No, buy Amazon. Why Roku? No. Why would you buy
Because
Roku?
Roku needs help. They're down 15%. Like that poor company.
I don't know. Like Fire TV is like all I need. I go for Fire TV.
I have Fire TVs on. Yeah, it's on every TV I have.
Yeah,
even
Fire
though they're
TV.
smart TVs, it's so much easier to
But-
use.
Well, the thing is there a TV that you buy that isn't a smart TV nowadays? Maybe I just don't.
I
Like
try to find the ones that aren't, because did you know that the processors they use, they go obsolete pretty fast. You'll notice it gets laggy faster, and you'll have to replace the TV sooner.
that's
If
what
you
happened
buy-
to me. The smart TV functionality started breaking on my Samsung, so I got a Fire Stick. It works better.
Yep. So I try to find the dumb TVs, and then I buy the sticks.
Well, that's funny because like I think our TVs are smart TVs. I'm pretty sure they are, but we just have Fire Sticks.
This is potentially a good point. When you're warning.
Did you know? Remember, you thought that Walmart might buy Humana?
Yes.
They bought something, but not that.
What'd they buy?
We're gearing up to buy something. Vizio.
Oh, that's why Vizio popped. I was
Yeah.
just playing. Interesting.
So you were right. They were gearing up to buy something, just not the right one.
Vizio? What's the
Yeah.
ticker?
Is it
You know.
VZIO? Vizio.
It really makes sense actually for. Like I've always pictured Vizios with Walmart. Look at that vertical line investing.
Are they like Vision Healthcare?
No, they're televisions and sound.
You know what
bars.
Vizio is?
Oh, no idea.
Fabio,
They're
truly.
they're crappy TVs. So
Yeah, they're just like they're like cheap smart TVs. They're
Yeah,
smart
really?
TVs, right?
I had one. It was terrible.
Oh, I sorted. I had no idea what a Vizio is.
It's perfect for Walmart. It makes a lot of sense.
TVs are Vizio.
Are they good?
Andrew, listen, you make good money now. It's time to move up in the world.
I've never had a problem with them.
Yeah.
Dude,
what-
LG, if you ever upgrade. There's no
I
other
have-
alternative.
I have a Samsung TV right now.
I have
yeah,
Samsung. I wish I could convert all to LG, but I'm not going to pay that right now. But
Okay. Vizio. I had no idea. Never heard of this company.
see, that tells you the circle is Fabio's in, people.
I know. He knows.
We know.
He knows-
You know, of course, you
he
don't know.
knows-
What
wait,
Vizio
wait.
is,
Listen,
Fabio.
this guy knows everything about how like high-end fashion works, the things you have to buy. The Vizio. What is a Vizio?
What is this
Peasants.
Vizio? I don't know about this peasant TV brand.
How it is. and the only reason why I know that other stuff is because anyways.
He's got nothing.
I actually do shop at Walmart on occasion, but I mainly shop on Amazon. Like Amazon is everything. I buy everything on Amazon.
Wait, go up to ET Face Home comment.
Where I'm going low.
Just a little up. I didn't know that. Is that true?
I have no idea.
Apple blocked porn on the Pro. They can try.
To be
Good luck,
fair,
dude.
like that'd be well, no, because can you see what someone? You can't see what the person's seeing in a Vision Pro, can you?
I don't think you're supposed to see their eyes, right? But
I don't know.
I don't think you can see what they're looking at.
Hmm.
I mean, good on Apple if it's not going to work, but it's cool.
Apple is a company of the cloth. They have banned such degeneracy.
That's why
On the
they're white,
platform.
right? Their logo is draped in white.
Yes. I did see Apple was promoting Vision Pro content on Apple TV Plus. They have advertisements? They have no idea what the audience wants it.
I have no idea.
Clearly, they didn't ask what people want.
They didn't do enough market research. They're like, if we you know what? Meta should come out and say tomorrow.
Zuck doesn't give a damn. Your
Yeah.
boy Zuck don't care what you put on his freaking one.
No, they should do like they should sell an accessory, like get out an accessory that's like a sensual accessory that you put like a bodysuit on.
God. Lord.
Immediately sell out. Immediate sell out.
What are you talking about? Latex suits or something? You gonna gimp it, Fabio?
Man, Fabio,
Your goggles on.
Fabio's starting to understand like why like corporations do they do. He's like sitting there. He's like, imagine if I had like 50 times the shares I have, and I'm the CEO of a company. Well, what would I do?
No, you can call it meta feel. I don't know.
What's their Meta Quest?
Yeah, Meta Quest.
Yeah.
I feel like it's fine. You just make meta sexual quest, and then you're fine.
All right, we got into the degenerate side of
Someone asked if they were gonna have new business lines, so you answered the question.
I think it was something about Apple, not.
Well, no, Apple's new business lines. I don't really. I just say that people underestimate their ability to do so, but hey, we'll have to kind of see how they're able to monetize services and the App Store even more than they already do.
I mean, they could just keep taking PayPal's lunch money all day. There's their new business if they want.
Oh no, that's what I'm saying. Apple Pay takes a cut.
Yeah,
that's a great business. Just plug and play what PayPal does. Of course, if they were to swallow up the entirety of PayPal, I'm not so certain that's that material.
For Apple, no.
Exactly. For PayPal, it's everything. For Apple,
I mean, because PayPal's like what, like 2-3 billion in net income. I mean, I'm assuming Apple does that in like a week.
That's insane to just think about. But
let me see, what does actually Apple do on a yearly basis?
I think it's more than 50. I think it's well over 50. I think it's getting to that 100. So they're doing a couple billion a week in profit. I'm thinking that because their buybacks are like 80 billion. They wouldn't be doing buybacks of 80 billion with a profit of 50.
Yeah, I mean, for this year, it's estimated 100 billion.
Boom.
Wow.
Yeah.
So they could just pause share buyback and just swallow up PayPal if they wanted. Wow.
If I was them right now, who am I? I'm not paid the big bucks. I'm not an executive at Apple, nowhere near that. But I would just be pausing buybacks and just like hoarding that cash and then just like threaten the market to buy back shares. Just like, all right, make me cheap. See what I do. See what I do. Because right now I feel like, at least when you burn money, it produces heat. I don't agree with the buybacks. But hey. Okay, so Apple's acquiring Rick. Apple's acquiring Rick, then expanding into adult films.
It's all part of the plan.
Yeah.
Oh, Rick, they could literally do. It's like they pause. It's literally like 2 days of income, and it's like we can buy them.
Oh yeah. It's literally not even. I think it's like a day and a half.
Yeah.
A day and a half, and it's like, all right, we can buy all of Rick. So let's see. I think Apple's profit exceeds the revenue of all other Hollywood studios and streaming services. Yeah. Like they don't even. It's so funny that they're involved in Apple TV. And by the way, Apple TV has some pretty good content. Okay.
Does it?
Yes.
What's good on it? This is me being genuine. I'm just.
So I'll give you some shout outs. The one that Dan said he subscribed just to watch that. Dan, now that you're on Apple TV, I'll give you some recommendations as well. If you're into sci-fi, there is the season 3 is being filmed right now, so you have 2 seasons to go through. It's called Foundation. It's very good.
Oh, was that the Momoa show?
No, that's C. That's another one.
Oh,
Then they have a couple that are pretty good. So those are just to get started. Watch those, and you're good. But anyways, Apple being sold by Buffett. It's like it's whatever. He's trimming it.
that was like his dividend contributions this year. He's like, we'll
Oh, yeah,
trim a bit.
Severance, and Ted Lasso. Those are other two. So, the last one that we wanted to talk about is Andrew's favorites.
Mm-hmm. Yes.
And that, well, we were also going to talk about Pabrai, but we'll ignore Pabrai. He doesn't deserve to be talked about.
Yeah, because I got to get going anyways. But if you want to talk about him after I leave, then you guys can do that.
Let me pull him up, and we're gonna.
I don't know who this is. Bullshit.
You don't know who his favorite investor is?
I don't really follow super investors,
So this man has never had a down year.
Ever. I think he's what, 30% CAGR is his?
Yeah, it's ridiculous.
you're not talking about the Renaissance guy, are you?
No, not Jim Simons. Simons? No. That doesn't count. Like, 'cause he's an out, like, he's a quant. I mean,
Stanley.
yeah, Stanley.
And it's his family office.
You know Stanley Druckenmiller?
He legit went long Nvidia, and he's the reason why. Immediately when he said, and he saved Andrew tons of money, tons of money. When he said he's long Nvidia, Andrew was short Nvidia and immediately closed the short. Immediately.
Like, as you like, when he says he's my favorite investor, like he really is. I am never taking the opposite side of the trade with this guy. Like, I was like, oh, like I'll sit something out, but when he's he's
just lucky.
Like, cause he outperformed 70 years in a row. He's just lucky.
Because like he literally came out.
What? He's sitting in his freaking lavish office.
Whoa.
He's like, oh dang. I'm just lucky.
Wait. People said he was trimming Nvidia. He went more in Nvidia. What are they talking about?
He trimmed the shares and then he went options.
Yeah, then he went long calls way more than he had shares.
Interesting.
But that's presumably less capital.
Yeah.
Yeah, that's a lot less capital. So basically, like,
that's how they count it. Okay. I thought they were taking the dollar value of the options.
Yeah, no. That's
this is notional value.
What it represents.
Okay. It's notional. Okay.
Correct. Yeah.
That's why I was like, holy what? That's why you saw my eyes shoot up.
Yeah, he just goes hundreds of millions of dollars.
That's what I thought. I was like, that's the reason Nvidia's been flying.
So I think the way to see it is he bought 489,500 contracts.
Okay.
Or is that no? Wait, no. Sorry, that's the shares
divided by 100.
Yeah, divide that by 100. That's how many contracts he purchased.
Like 48,000 or something.
Yeah.
Which is still a shit ton. Imagine buying 48,000 calls.
We can do the math on like more. Well, actually, we don't know the details of the options. We don't know exactly what he paid for, but presumably what he's thinking, and I'm just guessing, is like, okay, I can take some money out off the table, take some profits here, long-term cap gains, and I can still try to capture any upside that I miss out on with that sale by purchasing options for less money that I'm taking out.
Yeah, I know this is small. You see what he added right there at the bottom?
Coupang?
No, at the bottom.
Oh, sorry. Well, okay. So I put in the title portfolio discussion. This is not a portfolio update. I will be doing a portfolio update for the public audience, but I guess I can discuss some of the newer positions since the last public update briefly, because I want to save that for the actual portfolio update. But let's not to bury the lead, but ANET is one of them, and that's why Andrew is like
ANET.
So He added to Microsoft. He added to Coupang. I don't know. It seems like maybe it's about net. I don't know how to measure the Nvidia. He trimmed some of his shares, but then he bought calls. I don't know how it comes out.
If I had to guess, yeah, he put less capital in on the calls. He's still trying to capture any upside that he misses out on. He doesn't.
Yeah.
He still thinks that there's still some strong potential, but he's de-risking
Mhm.
because that's a reduction of 29% of the position. So he took off 30%.
Yeah.
And then if I had to, yeah, he has more share representation if you count what the options were than what he sold, for sure, because if you do the math, like kind of do the reverse of what a 30% decrease would be, it'd be, less than 242 million shares.
Yeah.
But anyways, Coupang is also an interesting one because he did increase that by 10%. And Microsoft, the man's buying Microsoft at these prices.
Winners.
I think it goes back to like Microsoft's the best company in the world.
Makes me just like feel stupid for not owning it,
Me too, but like also, I don't know how they've done, but I think we've all outperformed it. So I think it's like, well, but like, I don't know.
Andrew, aren't you partially indexed, like passive?
Oh yeah.
Okay,
I'm
well then you do own it.
majority. Yeah.
Yeah, then you do own it.
True.
Don't lie to the good people and don't sell
Well,
yourself short.
Okay.
Yeah, you do own it.
This is
Winner. Winner.
Winner.
I'm the only one. Well, me and Andrew are the only ones without alcohol.
You know, it's wild. People, you guys, you youngins probably don't remember, but Microsoft was a terrible investment for a long time. For like 16 years, you would have gotten nothing for holding it. So people from .com until like 2016, your return was zero.
So like right when Drunken Miller bought it.
Yeah. It was never an appealing investment, like for most of my time.
I mean, am I wrong?
No, you're not wrong.
Not wrong.
It's funny. It's just like right when he bought it, and Andrew just like, you see, he's my favorite.
No, dude, literally if you go to oh my gosh. I'm gonna pull up
But I mean, it makes sense for all those years. It basically functioned like, I mean, because they sold Windows with new computers, right? So they weren't like a service company. Like it's a totally different company now.
Yeah,
the way they operate. You could have said they were in the hardware business basically for most of that time, because that's what they were doing.
Oh, can I get rid of these stupid dividends in this view, and then I can?
I did want to ask whoever one's like out of all the super investors, who did they like the least, or didn't get why they counted as super investors?
No, you should say who are we most similar to is a good question.
Dude,
yeah, that one's more positive.
Who are we most similar to? I don't think I can answer.
I can. I hate to say it, but Bill Gates is who I'm most similar to. I hate it, but
you're evil.
But I appreciate his portfolio.
Not winners keep on winning.
Like who our portfolios are most similar to? Fabio's like, bury my flurry. I don't think so.
Oh no, day trading mindset.
No trolling.
Who am I most similar to?
Druck.
I don't. Surprisingly, no, I don't have actually a lot of overlap with his portfolio. I don't think.
Okay, so I'm just gonna share this because Andrew shared this with me, and he said this is where he bought right there. This mad lad.
As we like to say, this motherfucker don't miss.
Wait.
I remember
what?
when it dropped to 250. I was like, man, I should just buy some Microsoft. It just
oh
makes
no
sense.
Is Robinhood? Oh no.
How would it
No, no,
track?
no.
How would it track hedge funds?
No, I know what. Okay, if they're doing what I think they're doing, that's bad. That's not good.
Is this like you can buy an ETF based on what they bought?
Yes, and it will just like auto allocate based off of what they've done, but you're always gonna get it late.
Yeah.
That's such a mistake.
Well, the other thing. So I guess we can talk about this because it's kind of relevant now. This doesn't factor swaps. I don't think it factors international companies.
No, no.
Or both of those. Burry, the way he made all his money was swaps. Like, so you could have tracked Burry and you would have lost like all your money probably in that time.
Mm-hmm.
So it's a terrible, terrible way to invest, but very smart product from Hood because a bunch of idiots will do that.
Yep.
I don't know that's his name. So for people who don't know who LeBron, it's not actually LeBron James.
No.
It's just
Oh my
funny to
God,
call
did
him.
he? I didn't know that one. Oh.
So, but he sold puts, so he was bullish. Bullish. He just missed out on all of that.
All
Yeah.
the games. I've been arguing with two people today, and I'm not going to say where or who they are or what their names are, but it's actually horrifying that I'm discussing with two people that believe that you can get 20 to 30% annualized rate of return with very little risk, by the way.
Is it with options and selling
Yes,
contracts?
they believe that you can do a wheel strategy. And after I tried to explain that, I started saying like, I asked, do you not see an issue with the following statements? And they were like, no, I know it's going to work here. I'm going to say exactly the phrase. When I said, how about you ask for the broker produced return, just the percentage, no need to show portfolio value. The response was, LOL, I feel like we're being trolled at this point. I'm not arguing anymore. It's going to work out. End of story. What?
So the market
Oh.
returns like what 7 to 9%, but you are going to get risk free 20%.
Do you guys know who this is?
Yeah.
I don't
This
know.
guy,
Matthew,
very
Peterson.
funny guy.
Uh-oh.
So
Oh,
Hey,
wait.
Hayden! Good old Hayden.
Wait.
Thanks
Are you
for
asking who
that.
Henry is or who Matthew Peterson is?
Matthew, no. Henry's a viewer of the channel.
Okay, yeah.
So Matthew Peterson CFA gets me 20% CAGR on my cash. And yeah, that's the guy who started the fund, and he does like some
Oh yeah.
Python
Yep.
option strategy. Yeah.
Was this the dividend capture guy we were making fun of? Yes. Okay.
Yes. Yeah. And
Guaranteed,
he
apparently, that he figured out how to make it work. So,
yeah. It.
Like Fabius made a really good point. He's like, this is true. Why do you have any money in stocks?
Yeah.
It's like,
Yeah, because on top of it all, he pitches it like it's risk free. It's like, oh, it's just easy. Just throw the cash in there, throw it in our algorithm, and put it through our Python algorithm, and just go boop, 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 boop. We make 20%.
Every dividend investor at some point asks, why don't I just buy it before the dividend and sell it? But apparently he's found a way to make it work. No, everyone's tried to make it work.
Yeah.
Fabio, we have a question about what's your returns? And what the follow-up question should be is, can I free thinker with you?
Can I free thinker with you? So I did end up posting the full list of returns in the club, so all the club members have it. So it's not even like a question, because I know that like the scammer information wars is sort of beginning, which is a sort of a compliment in some ways, because it means that we're making some sort of a difference to them.
They scurred.
But I'll let the club members say it if they want to say it, but they all have it.
It's high.
Broker produced, by the way, not some spreadsheet.
I think the bigger thing though, like if we're gonna be real for a second, like because even broker produced, you could manipulate, as we've
Yeah.
talked about.
Yeah.
I feel like you have a community of people that have been able to verify along the way that you made these plays, and
Yes,
more
that
importantly, you have
also
it documented in YouTube videos. Like here's where I'm, and especially your top concentration has been fairly consistent, so it's pretty easy to go like, oh, okay, that makes sense.
Yeah, and also the numbers relatively check out because you could also probably spot if like numbers don't really check out with
Those-
one or the other.
You're just lucky that you bought Meta, right? Is that what
Oh,
you're saying?
I also remember I calculated without Meta too. And
I-
I also show the years
You're
before
just
Meta.
lucky.
Yeah.
I would
Those
like to
people.
think also that like each and every single one of us, if we did an earnings report, like grade card or like whatever, we would actually like account for things like seasonality, which
Well,
some people don't.
I know. Okay, so the financial academic, not theory, but concept that you're very popular with, I've benefited from it. Portfolio balancing, retiming luck.
Yeah.
Well, did I say it correctly? It's a little late.
Just timing luck. We can just simplify it.
Yeah.
I wish I could show.
Oh
my
no,
Richard
Julius
Branson
Caesar. I'm not
photo.
even talking. So that
What?
one's, I think, just for snippet in time. Julius, I'm talking about in the portfolio update section, like the full comprehensive one.
Yeah.
Because Merrill also breaks down even like the years, and so you can go back on like the compound,
So you
compound
keep it in
annualized
where,
return.
You keep it in. I like if I make money shorting stuff, I take it out and buy stuff and go on vacations.
Yeah.
I don't even know if it would show because it's all coming. It comes out. Like I bought carpet and I went on a cruise because of Virgin Galactic, but
Yeah.
Wait, Virgin Galactic, you shorted that?
yeah. And Vorb.
Dan,
I
I
shorted
told you
Vorb
that
in
is the only
bankruptcy.
shot.
Actually,
Them becoming a massive multi-billion-dollar entity is the only shot of my region of the world becoming relevant.
sorry.
You can't short them. It is not allowed.
I got kids to feed, Andrew. Listen. All right.
Andrew, you're the reason why where you live it will be completely relevant. You're gonna build a statue of you, at least one, bare minimum.
Down to 190. Okay.
Gil's asking for Andrew's rate of return, which is really good too. Andrew's is really good. I
posted that on
posted
Twitter.
yours on Twitter.
Yeah, mine's on Twitter as well.
And produced by Fidelity.
Yeah.
So
Which
not as good as Drunken Miller's though. You're
I
kind
bet
of
my Uber call is higher than your whole return.
I got
The what?
I got two of those comments on my SoFi video with Tanner where they said if you don't like SoFi, then why don't you short it? It's like
The only thing,
it's such a stupid thing to say that to people. You don't like the stock, I bet you're shorting it, or why don't you? It's like, okay, are we grown-ups? Like, can I dislike things? Like,
yeah.
but Fabio is shorting Baba. So speaking of that,
No, I'm not.
And he
Immediately pulls the plug on that notion.
It takes quite a bit for me to short anything. I can count on one hand how many times I've been short something. Yeah, I normally am just simple, long only, occasional options.
you just
but-
don't understand China. The problem.
Clearly don't.
No,
Clearly don't.
not at all.
I'm always
No,
fighting.
it went
people
from
in
like
China.
300 to 70. You don't know what you're
you know, it's funny too. Now that we were talking about, not that it matters, but the Fidelity returns don't even count when I had to keep my accounts with Wells. I bet you factored those in. My returns be way higher. But actually, I'm kind of glad you didn't, because a lot of that was just like that was legitimate luck.
Just do what Paul did. Just sell shit and then change your cost basis and then brag about tax loss harvesting.
But that won't change your performance tab on Fidelity. I don't think.
Oh, okay.
What, selling options?
No, like selling stocks that are losers.
Oh yeah. It wouldn't. Yeah, it would. Well, what are you talking about? No. It should. If you lose money on a stock, of course it.
No, he's saying like selling losers, so it's not in your P&L anymore.
Oh yeah, because it's
Yeah.
only going to affect your unrealized.
Right.
Yeah, it'll record in your. It's only going to make your unrealized look better, but it will record in your total return. And then you have to see if it's time weighted or money weighted, which I should probably do a video on because that's a problem. But Gil, don't worry. I know if you. I remember that, Gil. Don't worry. I'll get. You did say that. You did say that. I'll give you that because I do remember that. But going back, time weighted return versus money weighted average return is actually an important distinction because M1 Finance, you know what they use, right?
Pies
Money.
Money weighted, not time weighted.
and
I
pies.
see the argument for that though. Okay, if you're not trying to like brag on the internet or like all that, money weighted makes sense because that's what you spend. M1's probably M1's probably trying to think about this for their end users, majority people that aren't out there that are trying to show the performance of their portfolio.
Yes,
So that's fair.
but but
You say that, but
but if you are, let's play a story. Let's say you're in 2021. You're doing your portfolio, and you have your strategy, but you're putting a significant amount of money in every month, and you're doing well. You're doing all these things. You build up your portfolio, and then 2022 comes around, and you have a significant crash. Let's say your portfolio crashes 40, 50%. But you're gonna make tons of course money, YouTube money, etc., and you're gonna keep putting it into the portfolio. And you put a lot more into the portfolio because your channel is actually a lot bigger now. All right.
I see.
So you see where I'm going?
Mhm.
So, and then now you put a lot more nominal dollar amounts in your portfolio in 2023. Sorry. Yeah. Now we're in 2023 and the market returns. High beta works. And now your portfolio, in terms of a money weighted average return, is going to look really good. But on a time weighted average rate of return, it's going to look a bit worse.
Yeah.
It's measuring your strategy. So time weighted average return is often the gold standard, the standard of how you're supposed to measure performance, because the measurement more so of strategy, and it removes the effects of inflows and outflows. So that's a little spiel, not a video on that, but might, if I have time, eventually make a video on that.
Mm-hmm.
Very boring academic video. So we had, I think that's pretty much. Oh, Bacon asked a question of who our favorite super investor is. I think everyone's Monish Babrai.
He has an impressive mustache. We cannot take that away from him.
He's a good marketer.
Damn, that's like a slap. That's the equivalent of an Andrew slap. That's as far as Andrew will slap you. Like, you're good at marketing.
I've seen Andrew bite. He
Yeah, no, he
yeah,
is.
yeah. He's gotten harder in the paint.
Only when I'm stressed. Oh, you know what? I have to check to see if I got the final report sent to me today. Should have.
No. Fingers crossed.
Yeah.
You can be gone with that stress.
Do they use basis points in your final report?
Bip somewhat.
I don't know.
Are they off by maybe 10 times the basis points it actually was?
Oh, shit.
So
I
have
don't know.
peaked at applied material Sauron.
And you have not peaked, or
I have peaked. I've
verdict?
peaked, but I want to look. It looks good,
okay.
but it's like, when will it slow down? When will it slow down?
Well, that's a silly question. What do winners do, Fabio?
They just keep winning. It's just buy chips. That's all you do. Just buy chips.
Yeah.
Oh my gosh.
Don't have to
Kathy,
reinvent the wheel here.
Not used to seeing Fabio Silver. Thoughts on Coinbase? No, I'm not interested in Coinbase. Cole, of all people, he said that's his favorite CEO of all time.
Never seen Fabio Silva.
Armstrong?
Yeah, the CEO of Coinbase. Yeah, this is what you're laughing at. You saw this comment.
I've seen you like no. What were we toasting? Disney, right? Or
Yeah, Disney. But I wasn't even drunk on that.
I know.
I didn't even get like tipsy. I didn't even get to that point. It was a significant amount of whiskey, but I'm also like 225 pounds. So I'm probably like 224, 223 right now, but round it up a little bit. All right. Just a little bit. Just give me a little extra weight there. Oh, you're having a whole conversation.
Yes. Andrew's
So-
Andrew's plugged in. He's in the zone. Focused.
So when we have the private stream in ICOM next Monday, we have that stock to talk about, the one that had earnings the other day and that you've been long.
Oh, United Rentals.
The one that I've been long.
No, not
Canadian?
United Rentals. We will have the discussion on United Rentals, but yeah, the one that you've been long, Andrew.
I was really interested
The
in that
one,
one.
yeah.
I don't know why you're not long that company. That
Did I
seems
not say?
up your alley, Dan.
I said,
yeah,
well,
no,
to be
you're
fair,
right, though.
he said he has an adjacent player.
Oh, I know what you're asking me. Okay.
Oh, you
No,
have Cummins, I'm guessing. That's
I'm
your
I'm
deal.
all around that space already.
Yeah.
So-
Except that.
Well,
except
because
that
my
one.
joke
You're
was like,
all around except that one.
my point was like their bear case is like EVs.
The fuck?
Very similar to Musa.
I kind of wish I hadn't sold my Cummings motors, honestly,
Yeah,
because
very similar to
they're
Allison.
doing it. The technology Cummings has is incredible. Like, people forget that.
Thoughts on Gemini, Google's new S called Gemini?
It's a Google product. It's probably terrible.
Yeah.
The odds are against them
Ooh.
on that.
Can I be frank that I thinking about it again today? I think I need to do it out of principle because I can't. Why still be in this relationship if you don't want to be in it? Why do I
mean,
still own Google?
I feel like
I mean,
like,
it's no McDonald's. Let's be real. It's just
ever
a
know,
shit
like,
software company.
people
with
date
that.
people and they're like, well, I can change them. There's a lot of value there. It's just hidden, and I can help bring it out. That's what I feel. Every time I wake up with Google, I'm like, oh, it's still run by this management team.
I
why
can
do I-
change them.
I can change them while I'm just a retail investor. Every day, you know what I do? Every day I wake up and I check Bill Ackman's Twitter and be like, please start talking about Google and how bad their management is. Be an activist. But he doesn't.
Yeah.
But-
I can't I don't know. I can't. Yeah, you can't. Day trading mindset. I can fix them.
I love that line.
Andrew, want to
Do you
do
need-
Carl to Google?
Carl Icahn.
Oh,
my
yeah,
guess.
yeah.
Is my
Well,
guess.
no. Carl Icahn's argument was like Apple's a fundamentally good company, and like he was just changing their financial engineering.
Yeah, and
there's-
give us back cash.
Yeah.
Yeah. Also, for the most part, on some of the REITs that are attractive, some of these super investors, they frankly have to be very careful with buying them. I don't know, because if you guys don't know, there are, not for all of them, and some of them are just like, I don't see them ever being interested in a REIT, like Michael Burry. His is a smaller fund. But some of the bigger funds, I mean, you could make the argument that they could put a small portion, but at the size that they are at, REITs are better in a tax advantage account. You're not really dealing with that at these fund levels. So a huge portion of the dividends is going to be not advantageously taxed. So it kind of makes sense that they'd for the most part, be like in a void. I think Michael Burry at one point had the private prisons, but for the most part, I don't really ever see REITs in these funds. And furthermore, again, there's limitations to how much they can own. So that limits you a lot to the larger REITs. And some of the more interesting REITs are small. Although I have exposure to some of the mid cap, large cap, not large cap, they're not large. Alexandria is like a mid-ish size company. But MAA and Vici, I think I've spoken about Vici before, just like double-edged sword. I don't want to repeat myself too much there, but MAA, all residentials kind of under stress. Their geography is also, let's call it, the narrative right now is overbuilding. But in general, I think residential looks attractive. You could go for the single family home, which I think is a little bit pricier, but less risk. And that's what, again, is pricing in a little bit less risk, higher liquidity of the asset base. You know, you can sell single family homes much easier than you can an apartment building. MAA and a company like Camden Property Trust, what's it? Oh no, the Essex Property Trust, Camden, MAA, and there's like one or two more in the apartment space, but all of them are under pressure. The charts are pretty much all correlating with one another quite nicely. Yeah, I'd say like all of them look relatively cheap to historical standards on a comparative analysis to themselves. But I think
Go
there's other
Brandywine.
REITs that are cheaper.
Go Brandywine if you got the guts.
Oh God, Brandywine.
If you got the guts.
Oh, easy. Chick-fil-A.
Not Lego?
Lego was one on my list on the tweet. I answered a tweet that was asking this question. Was Lego,
Yep.
Chick-fil-A, and the gaming company.
Not IKEA.
No.
I'd put Wegmans.
Big four firms, you don't want to own that. That's going to be as a partnership. I mean, they can't go
MLP.
public. No, I mean they wouldn't be able to go public.
Yeah.
Period. No, not Valve. Valve is Valve's maybe another one, but no, the other one, Epic Games, because they have the Unreal Engine.
If I could own a piece of Wegmans, the grocery stores up here, it's like a cult following, like Chick-fil-A for a grocery store. That type of following.
Yep. Oh yes, Michael. Fully aware. Very happy. Talked about that in the last Disney discussion. Yeah, because it looks like they're going to be using them as a way to get more presence in gaming, which is interesting.
I hadn't really put a lot of thought in that yet because they used to have a big presence in gaming, like back in the
Yep.
60s days. Disney put out a lot of games, so it's not foreign to them, really.
All right, so let me see. Oh, I see you're doing. You're sending the AL.
Yeah.
Okay, I see.
You almost slipped.
Well, I'll take a look at the model after the stream.
No, I just want to make sure. I feel like I'm being fairly conservative on those numbers, and it's coming out like insane. So
Really, I haven't opened it up yet, but I just
Yeah.
saw the title of the file.
yeah,
They killed LucasArts. Yeah.
Yeah,
Hey,
deserve to
they
die.
did. They were innocents. If you
They were
know, you
weak.
know.
Henry.
Oof.
Standard oil. Can't find the ticker.
Historian.
Yeah.
If you could have
Carnegie
owned
Steel.
Standard Oil before they split it,
Oh
God.
my God.
Oh yeah.
People don't realize how many
Yeah.
companies
Yup.
came out of that. Oh my God.
You know what? Split Amazon up.
No, you've always belittled that point. You've always.
No, it's
How
just
many-
they won't be able to make a strong argument for it because you have
You'd
to
be like
prove
what
harm.
6? You'd be like 6 companies minimum. I think.
Bucky's is another good one. Bucky's is another
Buc-ee's.
good one.
Yep.
I wish
Isn't that
Celsius
public?
was publicly traded.
I thought Bucky's was
Celsius?
public.
As
Oh,
in
yeah.
the drink company or the tokens?
Or the temperature.
The drink. I
Oh.
was just trying to get a rile out of you guys, and it worked a little bit. Immediately, Andrew went Celsius, the drink company.
Oh,
I don't know if I
wow.
want to rile him up more, but how would
I keep on saying this. I don't hate the
it's very popular now.
I don't hate the company itself. I hate the
Setup?
the analysis that's done on Twitter.
Oh, yeah, that too.
And
Yeah.
I don't, but like also I will say like I don't like the setup at all. Like they're priced to do very, 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 very well.
Winners.
Yeah,
In-
isn't there multiple similar to something like a CrowdStrike? I don't remember. I haven't checked.
No, it's not that high. Let me see. If it was CrowdStrike numbers, it'd be like, bruh.
I'm on the fence about selling CrowdStrike because it's small enough that it's like it's not really contributing that much. I wish I had way more. When I trimmed it, I trimmed too early.
Oh, you know what? It is CrowdStrike S numbers actually.
Oh, really? Okay. Well, don't know the justification because I don't think it. I don't even think CrowdStrike deserves its current valuation.
So CrowdStrike's trading at like a 90 ish PE, 70 free cash flow. Celsius is like 65 PE, 80 free cash flow. So like on a free cash flow basis, it's more expensive, but CrowdStrike has more dilution. So
I'm guessing for you prefer them as a game engine when you produce your games. I hear that a lot. Like Unity Engine was better for smaller indie games,
Yeah.
and then Unreal Engine was better for the AAA titles. I prefer the exposure to the AAA market, and they're also trying to go downstream too, and they're trying to take advantage of Unity's blunder. If you guys remember what happened. Some of them
there
are.
is one. Yeah, there's at least one.
no, he said leagues, not teams.
Oh,
Oh, yeah, that's where
fair
the money's
point.
at.
Well, I'm still looking at TKO. It's still on the table, but
Nah, haven't moved
Oh.
in yet.
just small piece. But
Oh, okay. Yeah. We'll see what happens with good old Vince.
well, earnings. I think earnings are next week or the week after. I don't remember.
Yep. All right. I think we can wrap it up here. We covered all the topics, and we don't want to make this too long. But thank you guys so much for watching, and we'll be seeing you guys on the next one.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.